Welcome back here with Money, and we are discussing insurance. We have representatives from both the general as well as life insurance industries with us. Mr. Rao, let me talk about health insurance because that's becoming one of the biggest talk points today. The awareness levels are increasing that yes, you do need it. But the question is ensuring that you buy the right product so that you get the insurance cover, the health cover when you need it the most. What are the critical facets that a buyer should keep in mind?
The first question is that the buyer should know what type of insurance cover health insurance cover he is looking at. Most of the time what we have seen, recently we conducted a survey mainly relating to the critical illness. We just wanted to understand whether people are aware about critical illness, what do they think about health insurance. Surprisingly, we found that most of the people didn't know what critical illness is. And this too, the population which we surveyed are professionals, working professionals up to the age group of around 60. So surprisingly, most of them are not aware about critical illness, and though around 60% of them had health insurance, they felt that health insurance is very costly, and they had an impression that the insurers don't pay claims.
Exactly. So, I did go through the findings of that survey, and the concept that the settlement process is not easy, claims are not really paid out, that was also a factor which is pushing people away from buying insurance.
That's right. So that is what the industry is trying to address. One is creating awareness about why one needs health insurance. Second is what is the claim settlement process, how easy the claim settlement process is. If you look at most of the insurance companies have a cashless claim settlement process where they have tied up with n number of hospitals, where if the patient goes, he can get his claim on a cashless basis.
But what are the areas that one should keep in mind? Because you keep hearing of a lot of instances where claims are rejected.
That's right.
What is the primary reason that you get for rejection of claims so that people can avoid some of these mistakes?
Any insurance product for that matter will have some certain exclusions. So it's important for the customer to aware what is not covered under the policy. So most of the insurance companies have now started giving a synopsis along with their product, highlighting what are the exclusions. So it's always better for the customer to go through the exclusions and be aware what is not covered under the policy. Second is it's very important for him, especially in the health insurance side, to know that certain types of illnesses, especially the pre-existing illnesses, are covered only after a period of time. It could be 2 years in some products, it could be 4 years in some products. 4 years is maximum. So if a claim is for the pre-existing illness within that exclusion period, that is not covered under the policy.
Here's a question, and we get these questions on the show as well. For someone who has had a pre-existing illness, or maybe a critical pre-existing illness, is he going to be in a black zone or a black window for a couple of years, therefore not having any chance to get any cover at all?
Yeah, normally no policy covers critical illness from day one. The pre-existing illness. So pre-existing illness will have a waiting period. That waiting period varies from product to product. Some product could be 2 years, some product could be 4 years. So the customer should be aware of that.
And similarly, I mean, we get questions from senior citizens because they are extremely worried about finding the right policy, because that's when you tend to need it the most, and the riders simply go on increasing. So what is it that senior citizens can expect or look out for?
Ideally, a person should start taking health insurance from a younger age, so that he has a continued coverage till he gets older. So if a person approaches for the first time taking insurance at a older age, naturally the premiums could be more, and there could be some exclusions coming in if he already has some illnesses. So that is a problem which people do face. The only way to address that is there are some specific products addressing to the senior citizens. So they could be, the coverage offered in terms of some insured could be lower, but they address to the specific needs of senior citizens.
Okay, fair enough. Now, talking about life insurance, Pranav, once again here, how much is enough? I mean, a lot of planners have models where you look at inflation, the cost of living, etc. But what's the best way of determining what kind of cover or how the quantum of the cover that you should go for?
So basically, there are multiple models to deal with that. But I will say for a layman already so much engrossed in terms of how to make money or how to earn, it's very important for them to understand what is the basic. The thumb rule is take 10 times of your income. And if you want to take in terms of number of, as per expenses you have, So what expenses should be, whatever is your age minus 60. So 60 is basically a retirement age, and if you are 40, so 20 years the gap. And if you are having an expense of 1 lakh of rupees per month, which means 12 lakh in a year, and multiplied by 20. So that is 2 crore 40 lakh, which is in terms of expenses getting covered over next 20 years. And I'm saying I'm not taking inflation into consideration because your children will get settled, so your education expenses and all of those. So thumb rule, 10 times of the income or 20 times, or the time frame left to work into what you called as your current income.
Now I'll come down to what we were discussing briefly earlier, the ULIPs versus pure term plans sort of debate. And here there is a school of thought, and it's widely propagated, that you should keep, you know, investments separate, and you should think of taking risk cover as a separate sort of financial issue that you have to deal with altogether. What would you say? Should one keep investments and insurance separate?
So I give a classical theory. Life insurance, life is made of words called as L-I-F-E. L stands for living too long. Then there is at the center called as if, and end is the early death. If you have provided, so if is that the center, if you have provided for living too long, which means your children's education, marriage and all other goals, through investments into different kind of product, which means you have done an adequate amount of need analysis through those products. If you have provided for early death, which means you have taken an adequate amount of protection, then whether you go the ULIP way or whether you take an investment separately, the choice is yours.
Now, ULIPs as a product have gone down in terms of popularity, or in terms of the extent that they were sort of available in the market. There have been regulatory changes as well, of course. But for someone who is looking at the option of buying a ULIP, because they still end up being slightly complex products to understand, not as straightforward as a simple equity mutual fund. What are the thumb rules there that you should know? Because there are a lot of people selling the products in the market. Clarity is still not entirely there for the policy buyer.
So when one is buying a ULIP, it is basically one gets minimum 10 times cover. So that's one part of that. And the remaining part of it goes in for investments. And investment is not going into pure equity fund. You can buy some 3-4 equity funds into it. You can buy 2-3 income / money market fund. Now, while we say it's a complex, the best part is ask for a benefit illustration when you are buying a ULIP product. It talks about what premiums you are paying, what kind of charges are going towards allocation. So it can be 1%, 2%. What kind of amount is going towards your mortality, which is the 10 times, 15 times, 20 times cover one can have. And then what is the value at which. Then it is very, very important to see what is the kind of a fund performance history of any insurance company. Now today you can get it on every platform.
All right, we'll take a quick break on that note, but we'll come back on the other side to talk about other trends that we can expect in financial year 2017. Are we going to see new products? Will distribution channels evolve? That and more when we come back.